Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video, I would like to talk about the global market. I would like to show you what kind of indicators you can use to build a view on the global market, about the sentiment, which is very important to take some trades. Once again, this is going to be more a global approach of how to assess the health of the global economy. So let's get into it. So I selected here a few indicators that I'm going to show you quickly and talk about and explain to you why we look at this. I remind you guys that I used to work for 6 years as a professional trader in banking, and that this is where I learned to use this. I also work with Gabriel on Discord, who was a trader for 10 years as well in the commodity market. So we are communicating a lot because we work together right now. And he's teaching me a lot of things about commodities that can be used to assess the health of the global economy. So I'm going to show you that because I think it's very cool. So first thing, let's have a look at the global market. So I'm going to use SPY, but NASDAQ is working too. So I'm not going to spend too much time on the TA here. I just wanted to show you on a daily time frame. Okay, I'm just going to analyze the move since the end of the COVID. So we have 1, 2, 3. I didn't know if the third was finished and we're doing a fourth or not, but now it seems to me that the third is not complete because this correction is too shallow, once again, to be the correction of a whole move here. You can just measure to know if a correction is deep enough to be considered as a correction. You just measure the move it was supposed to correct. So here the fourth wave is supposed to correct the third wave. We check that and we see that we didn't go to the 23.6%. So even 23.6% retracement of Fibonacci is not enough for a correction to be, good enough, deep enough. So we would need to go to the 405 level for that move to have corrected. So it didn't correct. So it's still the same move. All right. So we're still in the third wave. So right now, just looking at this chart here, I was bearish here. I took a bearish position and most of it took profits around here on BlackRock, but whatever. And here, because we had a bearish position as well on this one, but it's not the question here. What is interesting to see, guys, is that we now have the breakout on the SPY. So first indicator, the global market. So SPY, which is the tracker of the S&P 500. So we can see that if we take this trend line, so the blue one, we have the breakout. We had the breakout the day before, so it was already bullish, and we have the confirmation with a weekly close above this level, above the moving averages, above everything. So this is very bullish. Now, we're going to try to check the other indicators that we know we can use to see if this all goes together. So the first one that to me is the most obvious is to check the VIX. I was a volatility trader, so I know the VIX. So basically, very easy way to assess if there is fear in the market or not. If the VIX is trading above 20, then it means that everything can happen. And if the VIX is below 20, it means things are doing better. Here, during the move down, we had a VIX that went to 28. So there was a lot of uncertainty at these levels. All right, the S&P 500 was at this time going lower with quite sharp moves. And then we basically started to go lower and we break out below this trend line. So can we use trend lines on the VIX? I would be careful, but it's still interesting to have. I would maybe more use horizontal levels, like for example, like this. So we can expect maybe the VIX to come back to 12 if the market really gets quiet. We have here a sloping trend line that is broken and it's still a signal, but I would not take trades based on this, but it's still interesting to look at. So the VIX is at 16.3, breaking out below trend line and probably heading lower. So this goes together, of course, with the SPY breakout. So the first indicator that we look at is the VIX and is giving us positive signals for the global market as well. Now, more interestingly, guys, I want to talk here about the copper. So Gabriel explained to me this technique that is basically, so you check the copper and the copper is called Dr. Copper because it's a very good indicator of the health of the global market, because basically China is using a lot of copper, and whenever the economy is working well, they consume a lot, so the demand is high, and so the price of the copper goes higher. So whenever the copper is suddenly moving much higher, it means that there is a lot of growth expected from China, which means a lot of growth in the whole world, because I remind you that China is still the economy that contributes the most to the global growth. So we have a breakout on the copper, and we had it actually before. We have this breakout for 1, 2, it's the third day when the SPY 3 days ago was at the bottom, guys, all right? So this is one of the reasons we were starting to be bullish here, but we were waiting for all the signals to come. So right now we have it. So once again, we're gonna increase the sizes we use in our live trading portfolios on Discord. Follow us, guys, if you want to see what we do there. So link in the description. So yeah, the copper is making a nice breakout. As you guys can see, it had support on the 200-day moving average, not very clean, but still. So what can we expect from this? We have a resistance at this level, all right? So let's see what's happening around this level, probably a small rejection. And then if we move higher, this breakout would be again something we're gonna look at to know if the global market is gonna push higher. And if we have this signal probably before the move up on the SPY, we're gonna just try to anticipate by buying the dip on some stocks, maybe. Another indicator that is interesting to look at, guys, and you know about that, is the DXY. So what is the DXY? Is just the price of the US dollar against a basket of major currencies like euro, yen. I think there is some yuan now as well. So it's basically the price of the dollar against all the other world's currencies. So whenever there is fear in the market, people rush for the dollar. The reason behind is that most of the debt emitted in the world is emitted in dollars. So if things go bad, you want to have dollars to pay back the debt. So people just rush for dollars. They're gonna dump their domestic currency and buy dollar, because I'm talking about foreign countries, because they need dollar to pay the debt, and they're scared the dollar will be higher, and with their currency being devaluated, maybe it's going to be more expensive for them to pay back the interest of the debt. So this is the reason why the dollar is always going higher, usually quite sharply whenever there is fear in the market. And we can see that here the dollar went higher, so we had here a nice support. So at this level, we could have, for example, assumed that, would have a rebound. This was on the 8th of September. You see, it was here. So at the very beginning of the correction, we had the dollar that had a nice support reaction here. So we didn't see it at that time. So I'm not saying it's easy. All right. We were already doing some live trading on Discord. We got trapped a bit in this move down, let's be honest. But, now we're going to pay more attention, of course, but it's not easy to look at everything together. But just keep in mind that it's one of the indicators that can be used, and that is here would have been helpful. Right now, we went to the recent high that was around 94.5. So as long as we are contained here, so we're probably going to find support here. Let's see if here we go higher or not. You see, if we break that, it's going to be very good for the global market. And on the other hand, if we come back here and break this, guys, this would be the signal things are bad. But I'm very convinced we won't have it, because we have positive signal on the DXY, positive signal on the copper, positive signals on the VIX, positive signal on the SPY. Technically, and about the news as well, Evergrande default seems to be under control, and Biden financing plan has passed through at the Senate. So everything looks very good for an end of year rally. I'm going to give you my targets for the SPY, but first let's check the last indicator. That can be very good to use as well for the same reason. It's a bit more tricky because there is a storage factor that is quite important about the price of the oil, because it's very expensive to store, but it's still a very good indicator of the global demand, about the global growth. And we can see that we had already this sloping breakout, okay, here. So this was the first indicator. So let's see when this happened. This happened on the 27th of Sep. Where was the SPY? It was at the lows, okay? So here it was already a good indicator that the oil was breaking out, which is good. And then we had the confirmation with by making a new high above October 18th level, October 2018 level, so which is 877. So right now we are in no man's land, guys. Next resistance, where is it? Okay, let's try to find the next resistance. All right, we have one here. So we have actually some room. Let's see what's happening here, but probably we're going to get rejected. So this, whenever the oil is here, we can expect a correction on the global market. So once again, guys, I've been working in this environment for many years, and I can tell you it's not easy to, spot the right one. You're going to often see, oh, I have a signal here and the opposite signal over there, and you don't know which one to use, but sometimes they all go in the same direction. Okay, here, for example, crude is positive, DXY is positive, copper is positive, VIX is positive, and breakout on the SPY. So I might be wrong. Once again, it's always possible, but it looks very, very good here. So what can we expect on the SPY? As usual, guys, breakout. It's a sloping breakout, so it's usually retested. So we can expect a move higher, then a retest, and then again a move higher. And thus developing in 5 waves. In terms of levels, what can we expect? So basically, I think we can go close to this trend line, all right, by the end of the year. So it's S&P around 480, 4,800. So this would be a very nice move up. And I can tell you that we will try our best to jump in the stocks that look the best and to try to make some nice P&L in our live training. So in terms of percentage move in a matter of maybe 2 months, we can expect 6, 7, 8%, guys. So I think there is a very nice opportunity coming now. Once again, let's be careful. So let's check everything else on the market. But for now, we don't have any bad signals coming. So that's it for me. I hope you guys enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.